Good afternoon, everyone. Thank you for taking time out of your busy schedule today to join us for this webinar. My name is Sherry Zimmerman. I'm with DWD Technology Group. We are a Sage 100 partner located in Northeast Indiana. And we're always trying to find ways for Sage 100 users to achieve efficiencies with their software. Today, the folks at Avalara are going to be presenting their solution for sales tax automation. Before they begin, we're going to talk a little bit about some housekeeping things here. We've got a number of people on this webinar, so everybody's going to be muted just so there isn't background noise. We are going to take questions throughout the webinar, and then again at the end we'll open it up for questions. If you do have a question, there's a couple ways you can ask it. On your GoToWebinar admin panel, you'll see a little hand that you can click on, and that's a way for you to raise your hand. We can unmute you if you have your hand raised, and then let you go ahead and ask your question that way. Or you can use the chat box and just type in your question, and then we'll stop and read your question for the audience. So right now, Alex Lyons from Avalara is going to be presenting the information on sales tax automation. Take it over, Alex.
Thanks, Sherry. Hey, everyone. Thank you so much for joining today. I know that everyone has some unique challenges going on in our current climate, so I certainly appreciate you guys taking some time to talk about this super exciting topic of sales tax today. So again, if anybody has questions, please feel free to shoot them through the chat. I know that everyone probably will get tired of hearing my voice, so that'll be a good way of breaking up, and Sherry will read any questions that come through the chat to me so that we can address those, or certainly raise your hand so that we can get you to ask them over the phone. And then at the end, we will again open it up, but I'm happy to stop at any point during this to address any questions that are coming up. So just first of all, this is my information. If anyone wants to write it down, we'll also share this, this deck and all the information after the call, so you guys will have this. But afterwards, if anyone has questions or wants to talk any further about any of the topics addressed today, feel free to shoot me an email or give me a call, and I'm happy to talk one-on-one with any of you about any of the topics we talk about today. A little bit of background on myself. I'm a sales executive here at Avalara. I've been here for about 3 years now, working exclusively in the Sage space. So I have worked with only Sage customers during my time at Avalara. So, I have a good amount of knowledge, enough to be dangerous anyway, on working with customers that are using Sage. So a lot of manufacturers, resellers, people that are selling through distribution networks. And the sales tax challenges for businesses like that are sometimes a little bit different than your classic, e-commerce business or retail business. So, I'll certainly address some of that today, but just wanted to give you that background. I also work really closely with DWD. I know a lot of you work with Cons. Cons and I work extremely closely. We talk sometimes multiple times a week. So if you have questions that you maybe don't feel comfortable reaching out to me with, please reach out to Cons. Cons can help you as well with any of this. And we can get you on the path to answer any questions or help with whatever you guys might need. So to kind of talk about what I'm planning to cover today, this is sort of a high-level educational webinar from my perspective. I think that something that comes up a lot for the customers I work with day to day are just general questions around Nexus. And so that's really the topic of today, is Nexus. And just, this may seem silly, but the definition of Nexus is simply the obligation for a company to collect and remit sales tax. So as you hear me say that word, just know that is referring to a company's obligation to collect in a state. So the first thing I'm going to sort of talk about is just a general overview of some of the changes to Nexus and the sales tax landscape in general that have been occurring over the last few years. A lot of the stuff I'm going to be presenting on is stuff that I typically cover in calls with customers. So these are things that people ask me a lot, and that's why I've kind of created this deck to be specific to the most common questions that I get from customers. And then I want to address some of the challenges, or the most frequently seen challenges anyway, that I see customers dealing with as a result of all of these changes that have been coming down the pipe from a sales tax perspective. And then at the end of the conversation, talk about some of the steps I help customers sort of go through to get to a point where they feel confident in their company's compliance from sales tax perspective. So, please ask questions if you guys have questions. There's nothing dumb, so feel free to shoot those over, and I'm happy to address anything as we go. So the first thing, just sort of address the elephant in the room, is just that complexity has grown. Over the last few years, sales tax has gone from complicated to way beyond complicated, especially with the Wayfair ruling that happened in 2018. There's been many changes to Nexus. A lot of people I talk to are at some level, familiar with the South Dakota versus Wayfair ruling that happened in June of 2018, which introduced economic nexus, which I'm going to talk about as we go. But there's also been a ton of changes around physical nexus, and that's something that's maybe not as widely known from the customers I talk to. So I'm going to talk about both of those things today. The other thing is, once you know where you're supposed to be registered, there's the new complexities of having to deal with all the rules that are changing constantly. So if you're in a state like Colorado or California, you're dealing with constant updates around jurisdiction boundaries, rate changes, and then within Sage, that translates to you having to update tax tables or tax schedules there. So there's a lot that changes constantly as a result of your Nexus obligation. And then, with all of that, the costs are increasing of compliance. Whether you're outsourcing to someone like Avalara to deal with this, or whether you're dealing with this internally, this can be expensive for companies to deal with. If you've got, your staff dealing with this, and some people say they're spending hours, out of the last week of the month, hours upon hours, I should say, or sometimes days, dealing with filing returns in 20 states, or if you're spending, the better part of the first part of the month dealing with rate changes and the tax schedules within Sage, there's different costs that can occur, whether it's not, you may not directly be paying a dollar amount, but it could be your time. So it's definitely something that I'm seeing amongst the customers I deal with, is just that this is getting to be an expensive thing to manage. So the secondary thing to sort of understand is that, unfortunately, compliance is not optional, right? So, once you're in a situation where all of these laws have been released, the burden is on you to sort of keep up with all of these changes. As a business, it's up to you guys to make sure that you're aware of the changes in the states that you're currently registered in addition to any changes that are happening in outside states that may have an impact on your Nexus obligation. And that's something that is not always easy to keep up with. The other thing is just with audits. I think that the stat says about half of a state's revenue comes from sales tax, half of it. And so, you have to think about, when companies are not registered where they're supposed to be registered, how easy an audit can be to, or an auditor can come in and kind of request something from you that you maybe weren't expecting. And I've seen a lot of customers deal with this being found out for audit through their customers. So if you're selling to a customer in an outside state and they haven't been doing something properly, sometimes that can come back on you. And so once you've been audited, it's sort of hard to keep that from happening ongoing from then on out. And then, once you're audited, a lot of customers are dealing with back taxes. And then along with the back taxes, that's just kind of the surface. Then you've got penalties, you've got interest, you've got the time that your team is having to spend on preparing all of this information for the auditor and supporting that audit. So it's just something that, it's not optional, and it's something that can really, really take a toll on a company from a timing perspective and from a cost perspective. So, a big question I get from people every day is why are all these changes happening? I don't understand, why this, this isn't fair. We're just a small business. This is going to have such a huge impact on us. And so I do think it's important, and I don't, I don't often have a lot of customers that are empathetic to the state, but something that's important to understand in the why of all of this is that the vast majority of states in the U.S. are at a total budget deficit of about $55 billion. So you have to think about how much, and I already said it's about half of a state's revenue coming from sales tax. So you have to sort of think about, in the world we live in, as people are so able to order things online and have things shipped to them, how if you are not registered in the right places, or if you're not registered in an outside state, how that can eventually have such a huge impact on the state's revenue, and how that can have an ultimate trickle-down effect. States are implementing all of these new laws, such as economic nexus, so that they can start to recoup some of this money. So I'm definitely going to talk about, more about the economic versus physical nexus, but, I think it's really important to just understand, like, why is this all happening, and why do you actually have to go about getting into compliance, and why are the states, sort of after you? So, some of the common triggers that I'm seeing that companies deal with when it comes to expanding your Nexus obligation are going to have to deal with, when you're adding new locations potentially, or if you are creating a new warehouse to store inventory, if you're hiring employees that are going to be operating in outside states, if you're acquiring another company or merging with another company, launching an e-commerce site, anything that could expand where you are selling or who you're selling to can potentially trigger a Nexus obligation that is outside of maybe where you are today.
Alex?
And it looks like, yeah, I was going to say, it looks like there's a question.
Yeah, we have a question from one of our attendees here. They're asking, how do you see all of this information relevant with our current climate right now?
So this is something that I'm talking a lot to customers about right now. And, at Avalara, when the coronavirus stuff all started to blow up, as a salesperson, I'm sitting here wondering how this is going to impact, the customers I'm working with and decisions that they're making. And, what we're seeing is that, obviously, I've already mentioned 2 different times about how half the state revenue comes from sales tax. Think about right now how that's having an impact because of COVID-19. The states are, just like most businesses, are seeing a major dip in what they would typically be making from a revenue perspective. And so, I think that as we work our way out of this situation, that, we're really going to see potentially audits pump up. I think that, just like most businesses are going to be eager to start getting their revenue back, the states are going to be just as eager. So, I'd like to say that there's going to be some empathy, because of the current climate, and there might be for a particular period of time, while companies start to recover. But I think that ultimately the situation that we're in right now as a country and as a world is going to honestly exacerbate this issue. I don't think it's going to make it any less. So, we're sort of speculating that, but that's what we are seeing right now. There's actually, if anyone has questions more about that particular situation, COVID-19, and how that's affecting sales tax, we actually have some information that we can share. So again, make sure you shoot me an email after this, and I could share some blog posts that have been created by Avalara, and we also have had some webinars about that topic specifically to get some more information on that. So to talk about Nexus creating activities a little bit more specifically, I've alluded to the whole economic Nexus thing. I've alluded to physical Nexus. So when I'm talking to customers day to day, I've mentioned this already, but customers come in sometimes having had preconceived notions maybe about, they've done some research on their own and they feel like they have economic nexus in 10 states because they've gone to the actual state website, compared what those thresholds are to their sales volumes, and kind of made that predetermination. But what I am finding very, very frequently is that most companies are not aware of physical changes to Nexus. And what's really important to understand is that if you've got physical Nexus in a state, a lot of times that's going to supersede any economic Nexus. And I think we did a stat on people who come to us looking for guidance on this, and it's something like 81% of people who come to us, questioning economic nexus, find out that they have physical nexus that actually supersedes the economic. And so it's really, really important to understand this. So I would say for me personally, the things that I see missed most frequently among the customers I work with are related to trade show attendance and then employees that are in outside states. And when I say employees in outside states, that could mean, maybe people who are actually working remotely, like territory sales reps, or just anyone that's living outside of the state that the company is actually physically located in. But that could also be if you're sending people on site to do installations, if you're sending people to have sales meetings, or just any sort of on-site with a customer that can trigger an obligation physically for sales tax. With trade shows, a lot of people say, well, we're not selling anything at the trade show. Unfortunately, that doesn't matter. If you're at a trade show and you are advertising for your company at that trade show, the way the state views that is that you're in their state visiting and advertising for yourself to, in theory, people that are in their state and trying to generate business for yourself in that state. And because of that, they assume or not assume, they consider that a physical trigger. In the Sage world, there's certain drop ship scenarios that can trigger a physical obligation, as well as inventory that gets stored in outside states. So those are two other things I see a lot. If you're having inventory held in a warehouse that maybe is just through a third party, even Amazon FBA can play part in that as well. Those things can trigger physical nexus. So it's really, really important to make sure that you're evaluating this properly when you're going through all of this, so that you understand, what triggered the obligation and how long it's been going on. So to kind of talk about economic nexus. So what is economic nexus? So I've alluded to it a few times, but the South Dakota versus Wayfair ruling happened in June of 2018. So we are now almost 2 years post Wayfair. So at this point, all but 2 states, I believe it's 2, have released what their economic thresholds are. So what the economic threshold is that each state has made its own determination of what they consider to be significant economic presence in the state. So in some states, that is just a dollar amount. So in like California and Texas, their dollar amount is $500,000 in sales. So it's pretty simple to just look, have we sold $500,000 into the state of Texas over the last year? If you have, then that would trigger an economic nexus. Those are also 2 states that are looking at gross sales. So it doesn't matter if it's an exempt transaction or sold to a customer that is providing you with an exemption certificate. If you're meeting that $500,000 limit, you would be triggering an economic nexus. Many of the states are lower than the $500,000. So a lot of the states have set a threshold of $100,000. And then in addition, some states are looking at transactional volume. So if you are selling up to 200 transactions, that's a common number that we see in the transaction piece of it. And so the reason that they've done both of those things, $100,000 or 200 transactions, is to, target companies that aren't only maybe selling high dollar, but are maybe selling low dollar items, but a lot of different shipments or transactions. So, like all things sales tax, it's definitely not simple. It's not cut and dry, and it's something that's not sort of complicated to understand. So this is definitely something that if you've got questions about it, I'm happy to take you through it and help you figure out if this is something that's impacting you. But at this point, we've looked at economic nexus and we've looked at physical nexus. So those are the 2 ways that your company can trigger an obligation to collect sales tax. What is really, really important and what gets commonly misunderstood when I have conversations with customers is if you have triggered a physical or an economic nexus, whatever happened first is what triggered it. So, many times the physical nexus is going to have superseded economic nexus, but in this 2-year post-Wayfair world we're living in some cases, economic could have happened first as well. So it can get really confusing to try to figure out what happened first and what exactly triggered it, but it is really, really important to make sure that you understand the difference and what would have triggered that actual obligation. So if you have a physical nexus that maybe has been going on for a while, if any of the things that I've mentioned are, striking a chord, just understand that if you have physical nexus in the state, the economic nexus wouldn't matter because you would have triggered it through physical.
Alex, we have another question.
Okay.
Okay, so they're asking, how often do you see people have physical nexus when they thought they only had economic nexus?
So very, very frequently. So I sell, and I'm going to talk to you guys about the something that we do to help customers uncover this at the end. We do something called a Nexus Study very frequently with customers. And I would say for me personally, 100% of the time that customers are finding out that they have some form of physical nexus when maybe they just saw economic nexus was in play. But I think that official stat I may have mentioned was 81% of the people that come to us as an organization questioning economic nexus often find out that they've actually got physical nexus. So it's very common. And I've actually worked very recently with a customer of DWD, Cons and I have worked with them together, that they came to us registered in only one state. We did a Nexus study for them, and they found out they had a mix of physical and economic nexus in 33 states. So think about that, thinking you're only in one state and finding out you actually have an obligation to 33 states. That can have a huge, huge impact on your business, day to day and how you're dealing with sales tax. So, I've talked a little bit as we've gone, sprinkled this in, the common triggers, but just to kind of reiterate, change in ownership, if you're changing systems, this can sometimes create different changes. I know I've had customers who are on old versions of ERP systems that, maybe they weren't properly monitoring ship-to addresses, which can sometimes get you out of that economic nexus, whereas if you're going into an updated version, now all of a sudden there's an easy way to kind of get caught on those economic triggers through your new ERP system. So sometimes that can have an impact. The e-commerce growth is something I see very, very commonly. If you're going to be adding a shopping cart to your business and having the ability for a new audience to basically purchase your product, that is going to have a very big impact on, where you might need to register for sales tax. Expanding into new states. If you have, new offices opening up, or if you are planning to, have a new inventory storage facility, that can change things. Brick and mortar location is a very obvious one. If you are opening a location, that would automatically give you an obligation. And then, there's a lot of pressure from the states right now to make sure that you are keeping up with all of this and that you are able to get registered in these states and be compliant as needed. So, this is a very big question that comes up in the Sage world. What if everything I'm selling is tax exempt? I'm someone who sells only to resellers, or I sell only to manufacturers. Everything I'm selling is business to business and not direct to consumer. So I touched on this a little bit, but what's really, really important to understand is that 33 of the states, I believe it's 33, of the 46 U.S. taxing jurisdictions look at gross sales when it comes to economic nexus. So meaning they don't care if it's exempt. If you are selling enough to meet that threshold, you would have an obligation to that state to be reporting on your sales information. So I'll share this deck out to you guys so that you can have access to these case studies, but we do have case studies on companies that have had some big issues come up as a direct impact of their exemption certificate piece and maybe not managing that and not being registered properly. I had a customer that I was working with that, they their nexus in outside states was uncovered by a big retail chain that they were selling to. So they were selling to a retail chain that is operating pretty much in every state in the United States. That company went through an audit, and it basically brought them up in that audit. And so then the auditor ended up coming to them. And so that uncovers nexus sometimes. Your customers' audits can sometimes trigger this to come up as a question. So, you know, it's really important, even if everything that you're selling as a product is exempt, or if your customers are exempt from sales tax, it's still really important to keep up with this and make sure that you're registered in the right places and make sure that you are reporting what you need to be reporting on. So a big part of that is exemption certificate. If you are a company that's not necessarily dealing with sales tax, this is something you're dealing with. It's one or the other. So once you've created nexus in a state, at that point, your obligation is to either collect sales tax or to collect an exemption certificate from your customer. So, you know, with exemption certificates, there's a lot of challenges that I think get overlooked as you are, you know, expanding into these states. People, as they realize they're adding more states to the mix, start to panic about how they're going to keep up with the rate. But something that sometimes goes, I guess, unnoticed or it kind of takes a back burner is the exemption certificate piece of it. So in all of the different states, you have exemption documents for all of the different reasons you can be exempt. So there's manufacturer's exemptions, there's resale exemptions, there's government exemptions. And so if you are having an obligation to a new state, you would have to collect these documents from your customers and manage, you know, make sure that you're collecting the right document and make sure you're also managing the expiration periods around them, which can be different state to state. This is something that can be really difficult and time consuming. So we do have tools to help with this piece, and we can talk about this, you know, if you guys have questions. But, you know, I'm just recognizing that if you do have nexus in a state outside of where you're registered today, even if you're not really obligated to collect sales tax, this is something that you would be obligated to do. And this is something that is expected of you if you have triggered nexus in any states outside of where you are today.
Alex, we have another question.
Okay.
Okay, so they say, so as a mainly B2B business, what should I do now if I think I have more nexus now due to the economic nexus rules?
So if you are selling primarily business to business and you think that you might have created nexus outside of where you are today, there's a step-by-step process that you can kind of take to get into compliance. So the first step is sort of the groundwork, and I'm going to be talking about that in the next couple of slides, is to do a nexus study to sort of understand where your obligation lies, so that you can then start to focus on where you need to be collecting exemption documents from. So if you have a nexus, you know, in 10 new states, the project that would be kind of step 2 is to make sure that you have all of the proper exemption documentation for the customers that you're selling to in that state. You know, if you haven't been selling direct to consumer and you have nexus, you don't have a sales tax liability, but you do have an obligation to have the documentation to prove why you weren't paying sales tax. So, you know, before getting registered in that state, you just want to make sure that you have all of the exemption documentation properly lined up, so that if registering in that state were to trigger an audit, you would make sure that you have proof as to why you weren't charging tax. Because something that is, you know, I guess commonly not understood is that if you don't have exemption documentation and you have nexus, you might as well have not charged sales tax. It would be just simple sales tax liability if you don't have the documentation to back it up. So your first step would be to identify where you have obligation. Your second step would be to make sure you have that right documentation before you make a registration move. And that's something that we can help you through doing. Let's see. Oh, my screen is frozen. There we go. So, you know, in addition to the certificate piece, another thing that gets more complicated as you expand into more states is the filing aspect, right? If you're going from 2 states to 20 states, You know, that's a lot of time that you're going to have to spend pulling manual reporting out of, you know, Sage or whatever your billing systems are, having to take that data and then convert it into the returns documents that need to be filed on every state website. I have customers that say they spend the whole last week of the month doing this. It can take a ton of time. It's probably the simplest step in sales tax compliance, which once you have handled the rates and the exemption document piece, but it is something that takes a lot of time. So, you know, we recognize that, and that is something that we can also help with as you get to that point. So just know, you know, we recognize that that's something that sometimes hinders people from getting registered where they should, because they don't want to have to deal with all this work on the back end. And so that is something that Avalara can assist with as well. So, you know, this is all kind of culminating into, you know, if any of these things that I've talked about today are triggering questions in your mind, if there's anything that you're thinking, well, I could have, maybe I've done that, maybe I've triggered obligation through this physical way or through an economic way, you know, it can seem like an overwhelming task to figure this out and to get into compliance. But what I will tell you is that I work with customers every single week, sometimes multiple times a week, on navigating this process. The first step in doing that is to conduct a Nexus study. You know, Avalara offers this as a service. Other third parties offer this as a service. I would say if there's any question at all around, are we as a business registered and collecting sales tax or managing exemption documents in the right place, get a Nexus study done. You know, we can help you with it, or you can go to another company, but it's definitely the first step in getting through this process. So with our Nexus study, the way that process works is it is an online questionnaire that we would give you access to. You would go through that questionnaire and answer questions that are very specific to activities that are happening state by state. So it's going to cover anything that would trigger a physical nexus in the state, as well as anything that can trigger an economic nexus in the state. And once you've answered all those questions, we will take that information and convert that into a very detailed report that would explain where you have obligation and why you have obligation. So that's really important, the why aspect, because that gives you an idea of the time frame that you've had Nexus. You know, whether it be 5 years or maybe just 1 year, either way, you need to know that so that you can make sure you're making the right decision on getting registered. So part of the Nexus study right now does include a 12-month exposure analysis. The exposure analysis is going to look at your sales over the last year to determine if there might be any liability that needs to be addressed. So it's covering 12 months in this Nexus study that's labeled as taking 4 to 5 days. Sometimes companies might have a lot more intense liability issues that could go well beyond a year. And if that's the case, sometimes companies might want to do an additional tax exposure analysis, which is going to be a much more detailed version of what I just explained, to ultimately understand how much liability do you have as a company. Now, sometimes that liability can be taken care of by gathering an exemption document from your customer. And if that's the case, that's you know, a fairly simple thing to do. If you have actual liability, we will help you to make the right decision on registering in that state so that you won't end up paying everything that is due. So there are amnesty programs offered by the states that guarantee penalty and interest abatement, and Avalara can help you through those programs to make sure that you are getting registered in a way that's going to be financially responsible for your business. So, you know, once you've gotten through steps 1 and 2, which step 1 is the Nexus study, step 2 is seeing if there's any exposure to make your registration decisions. Step 3 is we can talk about our software. So Avalara, our bread and butter is our automation software that helps you manage sales tax compliance day to day. So we have a direct integration into Sage 100. Through that integration, what we do is override the native tax functionality in Sage. So it keeps you from ever having to touch a tax schedule. You don't do any research, you don't update those schedules. We keep up with all of the rates for you. So what will happen is when you're having invoices being processed through Sage, we are able to automatically calculate the tax based on the customer's location and drop that directly into your invoice so that the customer is being charged the correct rate. We do also have a tool that helps automate the collection, the filing, and the reporting of your exemption documents. So, if you come to a point where you need to get registered in 20 states, but before you can do that, you need to collect exemption documents and get those organized, we have a tool that makes that really easy. And then you would use that tool just as an ongoing basis to collect those documents from your customers and make sure that you're getting the right document and that you're correctly managing the expiration periods around those. So the way that works with Sage is when you're processing invoices, we have the ability to make sure we're cross-referencing to see if that document is on file and up to date before we make the taxability decision. So in every instance where you would run an invoice in Sage, we would either charge tax or reference their exemption document. All of the data from your invoices in Sage would ultimately get pushed into a dashboard where we would keep up with all of the liability information per state. And then we actually have the ability to file and remit the returns on your behalf. So it is an end-to-end compliance solution. A big thing that I have people say and a hesitation around getting into compliance is how are they going to manage it once they're there? And so that's where we come into play. We can help you uncover if there's any liability. We can help you figure it out in terms of managing it day to day as well. So with the Nexus study, sometimes people do the Nexus study and they may not buy the software. It doesn't lock you into anything. It's really just information for you to have at your disposal to make good decisions for your business. So it's really important to have this done so that you can uncover if there's anything that you might be missing. So at this point, I'd like to open it up for any other questions anyone has. If anyone wants to raise their hand or if anyone wants to shoot them through chat, that would be great.
Okay, Alex, I see we've got a question here. They're asking, once an economic nexus is established, is the obligation going forward only, or is it retroactive?
So once an economic nexus is established, the answer to that is actually sort of gray area. It depends. Sometimes it can be retroactive, sometimes it may not be. At this point, now that we're 2 years post Wayfair, it is safe to assume that you do need to look into the past. There were some thresholds that were released by the states as soon as July following that June decision, so July of 2018. So, we're almost 2 years past that threshold being released. So it would be important in cases like that to be sure that you're evaluating if there's any liabilities that has occurred in that time period, which is something that the Nexus study process would identify for you, because it does include a 12-month look back. That would give you a good idea of if there has been any significant liability created. At the end of the day, it is a decision company by company as to whether or not they want to maybe risk it and just enter the state without addressing the liability. There's always the case that you don't get audited and nothing happens. But in cases where that liability is bigger, that's where you might want to make a more conservative decision to potentially enter through an amnesty program. But I would say I see a good mix of businesses going both routes in that regard. And so it's hard to really answer that specific to a company without seeing some actual data around what they've been selling. And that's part of the Nexus study process. Is once it's been complete, we would actually get on the phone with one of our internal tax advisors, and they would actually give you some advice around it. They would, look at your actual numbers and kind of help provide some guidance on, do you need to actually do something about this before you get registered, or would you be maybe okay to just go ahead and get registered on a move forward basis?
Okay, we've got another question here. They're asking, is there a cost to the Nexus study?
There is. So typically the cost of the Nexus study, which does look at all of the United States, is $4,500, which is a one-time cost. something that we're doing for this webinar is anyone that purchases the Nexus Study as a result of this webinar will receive 50% off that Nexus Study. So that's the promotion that is we're offering for DWD customers right now. So 50% off the Nexus Study, which would make that $2,225, which is a one-time fee, would include us evaluating economic and physical nexus for your company, as well as that 12-month exposure analysis.
Okay. So again, if you have a question, you can either submit it via chat, or you can click on the hand button, and that shows us that you're raising your hand, and we'll unmute you and allow you to ask your question.
I will just say while we're waiting for any more questions, if you maybe think of something after this, or if you feel like your organization would like to have a one-on-one conversation about this, please reach out to myself or Cons. It's really important that you would go through us to talk about this, because that's how you're going to get a discount on the Nexus Study if you do need one. So make sure you reach out to Cons or myself with any questions that you might have as a follow-up. And we can schedule a call as a one-off to talk about this one-on-one. These are conversations that I have multiple times a week with customers. You know, it is not uncommon, even 2 years post-Wayfair, for companies to be, you know, finding out that they have Nexus in states that they weren't aware of. It's a very common thing that we're working with customers on identifying and helping them through this whole process. And, you know, Cons and I work really closely to help make sure that we are doing this in a way that you're comfortable with.
Alex, we've got someone asking how long the Nexus Study discount, the people that attend the webinar, how long that discount is going to be available for them.
There's not a limit on it at this point. So I can let Cons know if there is, but there's not a limit on the time frame. So it's not just through May. We do have some promotions going on at Avalara as a company that are going to expire in June 30th. You guys may have seen some messaging around that, but this is not included in that. So as long as you come to myself or Cons referencing the webinar, we will be sure to honor that 50% off.
Wonderful. Well, I'm not seeing any other questions at this time.
Okay, well, I will, I know that Cons is probably going to be following up with some of you. If anyone would like a recording of this, I think that can be shared as well as the information that's in this deck. So I really thank everyone for your time.
I do have a few questions now.
Okay.
Sorry. Okay, so one person is asking regarding physical nexus, what would constitute a sales meeting?
That's like everything sales tax related, unfortunately, it's kind of gray area. Technically, by the terminology set by most of the states, it's anything that puts someone from your company in another state on behalf of the business. So that's sort of the definition around it. Now, the gray area comes into play, and is it something significant enough that would come up in an audit, right? And that's something that, you know, once we get through the Nexus Study, there's decisions that sometimes get made to maybe ignore pieces like that. You know, if it's just something that you went there one time and there's not really anything like a trade show, there's no registration or something like that that's going to give you away. Those are things that can sometimes, you know, it would trigger it technically, but you could ignore it or get away with ignoring it. Whereas something like a trade show is harder to ignore. If you're going frequently, if you're doing for like installations and stuff, that's a little bit harder to ignore, or maintenance calls, depending on what your business model is. So, I mean, I know that's not an exact answer, but I would say it just very much depends on what exactly the activity was and how frequently it was occurring.
All right, and we've got Lawrence. I'm going to go ahead and unmute your line here. You're unmuted. So go ahead and ask your question to Alex.
Forgot my question already. Sorry, I had it. Just making some notes. Lost my question. I'll email her individually.
Okay.
That works.
Thank you.
You're welcome.
All right. So that looks like it for questions. If anybody does have additional questions or things that pop into your mind, as Alex said, just please contact her or Con Skembos with DWD. Their contact information is on the slide right now. Also, everybody that has attended the webinar, we're going to send an email that has a link to the webinar recording, and it'll also have Alex's slide deck here. So that'll be available to you after the webinar. Anything else that you wanted to share, Alex?
I'm good. Thank you guys so much. I hope to talk to some of you guys one-on-one, so please let me know if there's anything that comes up.
Well, thank you, Alex.
Thanks for organizing, Sherry.
Yeah. All right. Well, we're going to go ahead and shut this down. Thanks, everyone, for attending. Have a great day. Stay safe.